Hey everyone, it's Wednesday, September 14th. We're going to be talking to Julius de Kempenaer from RRG Research. We'll talk about sector rotation, and we're going to key in today on one particular sector starting to really emerge in a position of strength as the market continues to chop. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of stock charts, using the best practices of technical analysis and behavioral finance to better understand investor psychology and make sense of these markets. Yesterday, it was all about the distribution phase in this market. The S&P, the Nasdaq pushing down 4 or 5+%. Really showing a renewed sense of deterioration. Today, more chopping around, really rotating around yesterday's close. No real directional sense, but a lot of themes bubbling up under the surface, which we'll look at here in a short while. We have a great guest today. Julius de Kempenaer is one of the best. Always great to get his take on how markets are rotating. As a reminder, coming up through the remainder of this week, tomorrow, we have John Kosar from Asbury Research. We're working on some guests for next week. And then the week after, just as a quick teaser, we have Mark Chaikin from Chaikin Analytics coming on Tuesday, the 27th, and Mish Schneider of Market Gauge on the 28th. A lot of great content coming your way, but we also want to highlight ChartCon. Everyone I just mentioned, including our guest today, Julius de Kempenaer, Mark Chaikin, Mish Schneider, many others, will be part of our ChartCon 2022 event. You can go to StockCharts.com/ChartCon to get information on this fantastic event. It is a virtual event, 2 days, October 7th and 8th. I want to highlight the sector sessions that we're doing. Julius de Kempenaer will be on the show today. We'll be doing an overview of sectors. Then we have 3 different analysts, each going through one particular sector, talking to you about strengths and weaknesses, industry themes, movers and shakers on both sides, and help you make sense of these markets, top down, bottom up. It is going to be a fantastic 2-day event. So many great contributors are coming into our Redmond studios to help us put it together. Go to StockCharts.com/ChartCon to sign up. And if you're a member, you get a deeply discounted rate. So it's a really good time to join StockCharts as a premium member. Let's continue on today's show with our market recap. Let's talk about what's happening. As I mentioned, yesterday was all about distribution. We had Dave Landry on the show. We're talking about how to lick your wounds after a big time down day. Today, we have sort of a common, day two, right? After you have the big distribution, a lot of times you have sort of that choppy sort of, we're in a daze of sorts after yesterday, upswings and downswings at the end of the day, netting out to sort of an unchanged sort of day. Having said that, the S&P finishing up about 1/3%, just below 3950 at the close. The Nasdaq composite moving a little bit further to the upside, up 0.75%. Mid caps and small caps, both essentially unchanged from yesterday's trading. And the VIX moving lower today, back below 27 to just around 2630. Looking at some other asset classes here very quickly, mixed results of sorts in the fixed income markets. 10-year yields and it ended up coming down a little bit. Obviously, the big story over recent weeks has been the acceleration to the upside in the interest rate environment. We have the Fed meeting coming up next week that we need to talk about for sure, and the Fed, with certainly given the inflation data that we got updated this week, most likely going to stay fairly aggressive in their attempt to tighten monetary conditions. 10-year yields today, though, coming off a little bit from where we finished yesterday, just above 3.4%. Dollar index down just a little bit, and looking at commodities mixed as well. You had gold down about 0.4%, silver up about 1%. That's using the common commodity ETFs that we track. Oil prices a little bit higher in the energy sector, the best of the 11 S&P sectors today. Finally, cryptocurrencies also mixed. You have Bitcoin actually down, Ether prices up a little bit. Bitcoin cannot find a bid here. This is after yesterday's big down. I think it's down 8-9% or so yesterday, coming off almost 23,000 to finish today just above 20,000. Today, rolling down below that 20,000 level, now just testing it as we're going live with the show here, testing 20,000 from below. Big round numbers have tended to be very meaningful. Look at the chart of Bitcoin and just do a horizontal line at 20,000, 30,000, 40,000. You'll see what I mean. We often sort of gravitate to those levels. That has not been any different this time around. We've been basically chopping around that 20,000 level for quite some time. It stays below there. I question the upside potential because you really need follow through. You've not gotten that with the chart of Bitcoin. Let's look at the S&P 500 chart here briefly, just checking on where things were at. So here's yesterday's big down day, taking us back below the 50-day moving average. Today, again, sort of chopping around, finishing the day net positive, but no real significant move. This is, as I described it, again, sort of a digestion day or a lick your wounds day, right? You have the big move. It's common to have a bit of a counter trend move and often sort of just chopping around as the market sort of resets expectation, finds a new equilibrium. And then the question is what side takes control from here? Going into tomorrow, into Friday's session, that would be the big question mark is, do you see buyers reemerge, taking advantage of this 5% sort of recasting of the S&P 500 and an opportunity to buy in at lower levels? Or does yesterday turn into more of a further downside? A couple of comments to think about that. Number one, we highlighted yesterday what a big distribution day it was in terms of the market sell-off, and the chart I wanted to share with you. It wasn't quite updated when we were going live with the show yesterday. So I just wanted to show you one of the indexes we have on our platform tracks the percent of volume on up bars and down bars. And what we noticed is the fact that the advancers decliners based on volume was actually around a 95% down day. And what that means is on the New York Stock Exchange, looking at common stocks, 95% of the volume was on the downside versus the upside, meaning 95% in declining issues versus advancing issues. And that's really more the sign of a market in distribution mode. You don't see those big 90+ down days in a bullish tape, right? That's something that's more characteristic of a distribution phase. So that, based on the fact that we had the big drop yesterday and then compounded by the broad decline, right? Sort of almost everything was down there. It's about 85-90% of the individual issues were declining on the day. That's more of a declining phase. So, the number to look at, in my opinion, would be 3,900, right? That's the level we bounced off of about a week ago. That's the 61.8% retracement level of the June low to the August high. We hold that, and this is a market starting to stabilize. We break 3,900. If I'm you, I would start thinking about your downside targets, right? Now that we've not held 3,900, what are the levels we need to look at before? And I think a retest of the low becomes very reasonable of an expectation if you're not able to hold 3,900. Now, on a sector basis, this is what's so interesting about this market. Think of the first 6 months of 2022, the market down by any measure, right, of trend or momentum. But certain sectors obviously had a decent first 6 months of the year. And energy, the top performing sector today, a perfect example, right? Energy up significantly while the market was down significantly. Energy up 2.8% today while the market was just a little bit above unchanged. Consumer discretionary, which we're going to dig into a couple different segments today, up as well, up about 1.3%, followed by utility. So those three sectors actually having a pretty decent up day, even though the market was sort of chopping around. Now, here's the kicker. On the downside, you have things like real estate and materials down about 1.2% over that same day. What this reminds me of in this kind of market is it's not just a stock market, right? Just analyzing the top level indexes gives you part of the story, but digging underneath to think about sector movements, to think about sector strength and weakness, using a tool like the RRG to try to identify what's working and what's not, really helps you understand how, even though the indexes might be doing a certain thing, individual sectors and individual stocks can actually be doing something very different. I mentioned we'll dig into some of the consumer space in a little bit, but as I'm looking at the stocks that are moving, and so this is one of the widgets I have on my dashboard, it's the S&P 500 members, and I like to look at just what's up on the day, what's down on the day, and make sure I'm following the trends that are emerging. Look at how many of the top 10 equities today in the S&P were all in the energy sector. You have CTRA, Coterra, you have Apache, let's see, ConocoPhillips, Schlumberger, Devon Energy, half the top 10 all in the same sector. And if you look at these charts, honestly, it's sort of a chart that's rotated from distribution to accumulation, right? First 6 months of the year, strong uptrend on Apache. June through August, while the broad benchmarks are rallying, you see the energy sector kind of coming off. But then look at how this is rotated. A lot of stocks out there, as I'm scanning for new 3-month highs, are putting in a higher swing high and a higher swing low. Higher highs and higher lows is an uptrend. And you're seeing some of those emerge very much in the energy space, along with some other sectors as well. We'll take a quick commercial break. I'll be talking with Julius de Kempenaer. We'll see you in a few minutes. Hey everyone, welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Thanks for joining us every weekday after the close for our show. A couple quick announcements before we get to today's guest, Julius de Kempenaer. First off, we welcome your questions. We certainly welcome your feedback on your host, on our content, on all of our shows on StockCharts TV, but we especially appreciate your questions. We're here to help point you in the right direction on how to use technical analysis to make better decisions in your investment portfolio. Our email is thefinalbar@stockcharts.com. We are on Twitter at FinalBarSCTV, and we're on YouTube. Put a comment below the video you're watching on our StockCharts YouTube channel. We'll gather all those questions, hope to answer one of yours live on the air on Friday's show. Also, go to StockChartsTV.com. That's our on-demand platform. Julius's show, Sector Spotlight, all of our great content, and some fantastic special events like The Pitch, which I will be hosting on Thursday, tomorrow of this week. All that's available for free at StockChartsTV.com or on your mobile device. Just search for StockCharts TV on demand. I want to welcome on today's guest, my friend Julius de Kempenaer, founder of RRG Research, coming to us from the Netherlands. Julius, it's good to see you. How are you?
I'm good, Dave, and it's great to be back again on the Final Bar. It's
a pleasure to have you as always. We're going to use your visualization design, the RRG, a beautiful way to, in a very a simple way, but very powerful to visualize sector rotation. We're starting with the weekly RRG. Talk us through how you're perceiving the current patterns.
Yes, well, I mean, I'm on board with your assessment that the market is still pretty shaky. I mean, yesterday's down day was a good example. You know, different sectors moving up and down, and there's not a real directional trend in the S&P 500. And when I look at this RRG, there's one thing that people who watch my show, Sector Spotlight, on Tuesdays, they will know that I've been touting for quite some time that defensive sectors were on the right side of the chart. So utilities, staples, healthcare, those are the three really defensive sectors. They remained inside the leading quadrant, or they were rotating through weakening and getting back up. That means that they're in relative uptrends. That means that is where the market was hiding, so to say. And if you look at the chart right now, there's one thing that really catches the eye, and that's the move of Consumer Discretionary, XLY on the top, right across the top there. It's the highest in terms of relative momentum, and it's now pushing into the leading quadrant. Now, it doesn't get more growth, it doesn't get more offensive than Consumer Discretionary. And that is what makes me scratch my head, like, what's going on here? There's something going on under the hood, which at the moment I cannot understand. Maybe it will come over time, but right now I'm just watching this and say, I need to address this because it is strange. It's not what you expect in a real bearish market. It's something that is emerging bullish, especially if you switch to the daily RRG, which gives us a little bit more of a shorter time frame. Becomes even better. Look at where that tail of XLY is. It's just rotating back into that leading quadrant after a rotation through weakening and just very briefly through lagging, and now powering into the leading quadrant at a very strong RRG heading, which is basically confirming or underscoring the strength that we see on the weekly RRG. And as this is a daily show, I'm going to steal some of your airtime to introduce something that we just introduced on StockCharts, which is an RRG using intraday data. I have announced this and talked about it in my show, Sector Spotlight. but I had a little peek, and it seems that your show has got double the amount of viewers of Sector Spotlight. So even if half of your people are watching Sector Spotlight, I'm addressing at least 1,000 people who have never seen RRG or are not aware of the fact that RRG is now available on intraday data. So if you punch that 60-minute time frame, then you will be looking at the rotation of sectors during the day. Basically, what you're looking at here is 4 periods, so 4 hours of trading. So this started, if you make it like 5 or 6, you got the entire trading day. And it's quite amazing to see how these rotations take shape, even as the market is open and trading. And again, if you look at XLY, again, if you look at that tail for consumer discretionary, it's almost identical to what we see on the daily. So we've got the weekly, we've got daily, and we've got the hourly, all pointing into that leading quadrant. There's nothing else that I can say that consumer discretionary is attracting strength for some reason, which I cannot understand right now. And do I feel really comfortable? Probably not, but it is what it is. And I can't deny it. It's just happening.
Yeah. I feel like 2022 is not a year we're going to feel comfortable with much of anything market related. It seems to be,
no.
And it struck me when we were looking at the daily RG and the weekly one as well, right? The difference between consumer discretionary and consumer staples, right?
Yes.
I feel like in all three of these, you're seeing the rotation into kind of the relative offense and away from the relative defense, which is certainly a surprise. Can you just talk to us with the time we have left here, about a minute, Julius, about the energy sector, right? Energy is one of those areas where you've seen renewed strength. Where do you look opportunistically in this challenging sort of choppy tape then?
Well, I mean, energy it's very, from an RRG point of view, it's quite simple. This is the strongest sector in the universe. There's no doubt about it. If you just simply take the RS ratio, which is the horizontal scale, as your ranking mechanism, XLE is the highest ranking sector. And the fact that it is now rotating through the weakening quadrant is not really a problem, because it is so high on that RS ratio scale. And we know that really strong trends, they tend to complete on the right-hand side of the graph. So I am looking at XLE to sooner rather than later start curling back up and making that move back to the leading quadrant. And if you just look at the price chart of the energy sector, which you probably do every day on the final bar, you will see that that relative strength is still very strong. It's just going through a pause and ready to start bouncing and go back up. And if that XLE ETF takes out its previous highs, it's up and away. So for the time being, energy is still a very strong sector.
Thanks so much for highlighting the intraday RRG, by the way. That was a really nice addition to the StockCharts platform. Hopefully the next of many upgrades to the RRG experience with much more to come. Julius, it's awesome to see you. Can't wait to have you in town for ChartCon coming up real soon. But stay safe between now and then, okay?
I will, and thanks for having me, Dave.
It's Julius de Kempenaer. Julius is the founder of RRG Research, very, very kindly staying up a little late for us and coming to us from Amsterdam. And again, from watching the show, if you do consistently, we use the RRG regularly, and this is a big part of my own process every day, and certainly a key part of my weekly process to understand the rotations. What I want to just mention briefly to wrap up Julius's great comments there was thinking about the multiple timeframes, right? That is a theme that's come up with a number of the conversations we've had with Joe Rabel, who literally wrote a book about multiple timeframes, thinking about the weekly, the monthly, the daily, and how they relate. When Julius is using the RRG research, he's looking at the weekly, the daily, the hourly. Only then do you really understand the interplay of these different sectors. So you have a really great capability on StockCharts to think about different timeframes, put these rotations into motion, and really understand how things are, what's working and what's not. Great take there from Julius de Kempenaer, as always. Let's continue on our show today with the sector deep dive. Knowing Julius was going to come on and chatting with him before the show about a little look at the consumer discretionary sector, I wanted to do a deep dive into the consumer discretionary sector in a little more detail, understanding that strength, which I totally agree with. You're seeing this renewed strength in an area of the market which you traditionally think of as offense. But I would say what you have to remember about the consumer discretionary sector, it really is a fairly diverse sector, right? If you think of certain sectors like energy, materials in a lot of ways, industrials in some cases, fairly homogenous, meaning if you look at the energy sector, most energy stocks tend to move in a similar way because it's all based on the price of oil and whatever their business is, whether it's getting oil out of the ground or getting it into your car, whatever it is. They're all sort of related to that thing. When you're looking at consumer discretionary, though, fairly diverse businesses. And the way you can see that is if you click on charts and tools on our platform and use a screen called the industry summary. This is my favorite place to dig into sectors and sort of look at that next level down. If you click on table view, by the way, go down to any of the sectors, but I'll go to consumer discretionary. If you sort on the scooter ranking, which is the StockCharts technical ranking, what we do is take all of the industry groups, about 106 that we have on our platform, it rank orders them from the strongest uptrend to the strongest downtrend, and it's a percentile ranking. So the higher this number, the stronger the uptrend, the lower the number, the stronger the downtrend. And you can see in order with the industry groups that comprise consumer discretionary, what are the ones that are really getting it done over the time that we're looking at versus the ones that are really struggling. And if you look at just the names of the industry groups that are represented, it is a very diverse sector, right? You have retail companies, right? Like auto parts stores or specialty retailers. You have gambling names like Penn and Wynn and LVS, tire companies, toys, travel and tourism, hotels, automobiles, and all of those obviously are related to the consumer, but in a lot of ways, in many different ways. So you will find strengths and weaknesses emerge with these different groups at different paces. By the way, just to point out, one of the great things that we have on the RRG is the ability to take consumer discretionary and look at some of those industry groups on the RRG. So in the upper right corner of your RRG screen, you can actually bring in the groups for any of these 11 S&P sectors. So make sure you check that out if you've not done so already. Well, look at the chart of the XLY, and I think it echoes a lot of ways what we were talking about with Julius, that you're seeing this renewed strength. And just like we talked about with energy, sort of making that higher high, higher low, you're seeing a bit of a higher low here with the XLY, right? We highlighted this line. This is a line we drew a couple months ago. This is the rally in May. We sort of rallied back up to that level, pulled back here in late July, and then broke above there. After we failed at the 200-day moving average, we sort of came right back to that same general area, and now we're bouncing above there. This really represents a new higher low, and just like the XLE is sort of minting that new higher low, the consumer discretionary sector doing the same. As long as it holds that, this is starting to be a bit more of a constructive rotation. What you're seeing more recently, though, with the gap lower that you saw this week is almost a consolidation of sorts, some higher low and lower highs sort of pattern, which means we're sort of settling into an equilibrium here. I'll be very interested to see whether this rotation resolves to the upside, gets above the 200-day, resolves to the downside, gets below the 50-day, and I'd be watching that low from early September to see which way, right? Anytime you have a big consolidation, you wait to see which way we emerge from there. And a lot of times that tells you a lot about which side is taking control. You know, anecdotally, the buyers or sellers are taking a little more control. I want to drill into just some of the names. When you talk about consumer discretionary, I think you have to start with Amazon if you're sort of doing an overview, because Amazon in a lot of ways is the sector. It's about a quarter of the weighting in the XLY, if I remember right, probably 20-25%. Which means you're getting a big exposure to Amazon if you buy the XLY, for example. When you do that, you'll find that it's even more beautiful in terms of what a concept, what we call polarity, than you see on the chart of the XLY itself. I'm drawing a horizontal line to highlight this peak from June, and on a closing basis, right around $125 a share. That's the same peak that we tested here in late July. We gapped above there on Amazon, which is a nice move higher there at the end of July. From there, though, we came back and now have tested 125 from above. So again, this could be just a classic rotation and a brief pullback before you continue that process of what I'd call accumulation. But you have to hold 125. We break 125, and all of a sudden this chart starts to look a little bit different. At this point, I think you're testing a level of support, which formerly was resistance. That's a key level. 125 on Amazon is an important one to watch. The second name with about 20% of the weighting in the XLY is Tesla, and we'll look at Tesla, and if we have time, maybe one of the other automakers. When you're looking at the chart at Tesla, I mean, just this beautiful higher low here at the 50-day moving average, really testing once again this area of resistance. So 310 to 315 is where Tesla stalled out in August. We're kind of right back up there. If we can get above there, start to get to 320 plus, talk about a beautiful rotation again, not just making a higher low, but then making a higher high. And again, the upside for Tesla at that point really goes back to the previous highs here, sort of in that 380, 400 range, which would be a nice 30+% rally from current levels. Also want to highlight RIVN, RIVN, because this is, I think, from what my perspective, is going to end up being in a future textbook to analyze price momentum. Separate this chart into two parts. You have the IPO here in November, take that to sort of July, and you have the entire RSI in a bearish phase, right? When the stock sells off, you become oversold. When we rally, we rarely get above RSI 60. So the lower highs, lower lows, and the momentum overall sort of down lower in the range. All of that changes here July into August. Now, instead of the RSI stalling out at 60, it's getting to the overbought region when we rally. When we pull back, instead of getting down to the oversold region, the RSI is bottoming out around 40. Look at how the whole range of the RSI has rotated as the stock has gone from what I would call distribution mode to accumulation mode. Interesting chart, again, testing support or resistance right now at 40. We get above 40, and this all of a sudden clears the way to much further upside. So it's not just Tesla, it's some of those other related names really starting to show some renewed strength. The only other thing we have time for really when we're talking about this sector would be two things, maybe cruise lines, which is an area. Royal Caribbean is one I would highlight. Again, some of these names breaking above their June highs. They stalled out at a similar level here in the last month, but now rotating to the upside. Royal Caribbean making a new 3-month high again today. Norwegian, others showing a similar rotation to the upside. When I think of the XLY doing well, besides Amazon and Tesla, it's charts like this, sort of a number of individual names broken up. StarBucks, we'll leave it with that one, up another 5.5% today, making a new 6-month high, breaking above 90. Can that level hold? If so, that's a pretty decent chart. That's a deep dive, or a brief deep dive into the consumer discretionary sector. We have got to wrap the show. Let's go to the 3 and 3, 3 charts in 3 minutes that tell the story of this market. Here is chart number 1. The bullish percent index is one of the ways you can use point and figure charts to determine what a breadth indicator, right? To roll up the individual point and figure charts into a broader measure of individual strength of stocks. If you looked, one of the things we've highlighted, we certainly highlighted in mid-August, was this consistent pattern where on a rally, the bullish percent line for the Nasdaq 100 would get above 70%, which is sort of the standard bull market case. Then it would go back below 70%, and those would be some significant drawdowns. That happened most recently, third week in August. We came right back up to the 70% level, which triggers strong bull market conditions, and we failed. Yesterday's drawdown pulled us right back well below that 70%. So we never really got above the 70% level, which tends to indicate sort of a strong uptrend and a sellable peak. Did not get there yet based on the drawdown we had this week. Chart number 2, we mentioned the energy sector. I was glad I was able to ask Julius about energy, because energy certainly has been one of the stronger places. You're seeing renewed strength from stocks like Apache and Hess, which we've highlighted earlier this week on the show. Today, we'll highlight EOG, which is an E&P stock, an exploration and production stock. I think it's just a great standard way to illustrate this sector. One of the things that I would highlight, one of the technical approaches you can use, are what are called accelerated trend lines. And that's basically where you draw your first trend line off of the first 2 lows, and all of a sudden look at how the price is getting further and further away from that level. So what you start doing is drawing some additional trend lines with the subsequent points, right? Every time we make a new higher low, instead of sticking with the same trend line, it's tending to accelerate to the upside. That's why it's called an accelerated trend line approach. What's great about this is if you think of your stop as one of these trend lines, as you keep making higher lows, you can keep increasing the slope of your trend line and locking in additional gains until you break the trend line. And when you're looking at a chart like this, as long as we remain above that most recent trend line, trend is in pretty decent shape. Final chart, the restaurants and bars index. I highlighted Starbucks. I didn't get to CMG, Chipotle, which is another one which had a nice rotation higher. This group has made a higher low in September, back above moving average resistance. Can it hold that low on any pullback? Folks, that is our show. I want to thank Julius de Kempenaer from RRG Research joining us, sharing some great takes on sector rotation. He will be part of ChartCon, and I hope you will be a part of that as well. For StockCharts.com, I'm Dave Keller. Have a great night. We'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.